Arcimoto stock price prediction. Okay guys, in this video we're going to be talking about Arcimoto. So this is one of the EV stocks that I covered in the past. So I covered this stock, it was a few months ago guys, okay? It was before the huge February boom. And as you can see here, this is a year-to-date chart and I'm using the Webull desktop platform guys. And we can see that the stock has been absolutely crushed so far this year. So it was recently, during the February EV boom, it was as high as $37, and now it's fallen all the way back down to $11. So I noticed that Meet Kevin recently published a video over the weekend about Arcimoto, and he was test driving them with the CEO, and it looks like a lot of fun. So because of this attention, probably most likely, this stock is now currently trending #1 on Yahoo Finance. So since I've done a lot of research on EV stocks in the past and I'm pretty familiar with some of the better ones, we're going to do a fundamental and technical analysis of Arcimoto for you guys that are new to the stock. So like I said guys, this is a Webull desktop platform. If you're interested in using this, I like to use the Webull app as well as the desktop platform, and I've been using the desktop platform a lot more in my videos. So if you guys are interested in it, you can sign up using my link in the description below. You'll get 2 free stocks when you sign up and open a brokerage account with Webull. So what's going on here? Okay, so to give you guys a quick technical analysis here, as you can see here, this stock has been completely crushed. So it's been crushed for a couple of reasons. Number one, to be honest, Arcimoto stock is grossly overvalued. So we're going to get into that a little bit more in the fundamental analysis. But most of these EV companies, I would say, except for like Tesla and ChargePoint, the majority of them were hugely overbought simply because there was just a lot of hype going on in February. But this company doesn't really generate a lot of revenue, okay? So, over the short run, stocks are going to trade based on, popularity. But over the long run, like Buffett said, it's going to be a weighing machine. If there's no revenue, if there's no earnings, these stocks are going to come back down to earth. But I still think it's a fantastic time. If you're going to speculate on Arcimoto, this is a nice time to get into it, although you're still paying a bit of a premium for this stock. This is not one of the cheaper stocks that you're really going to find. And I'm going to explain to you guys why, so we're going to do a quick fundamental analysis here. So, to give you guys a quick background on what exactly I'm talking about, I just want to show you a quick rundown of the actual product itself for you guys that are new to my channel. And then we're going to quickly go over that fundamental analysis. The fund utility vehicle starts at $17,900. Okay, so basically $18,000 for this vehicle. Okay, so it's not the cheapest vehicle out there, but it's really built for ease of use, and it's really built to get around town quickly. So some of the key specs, okay, top speed is 75 miles per hour, 102 city mile range, and 173.7 city MPGe, guys. So so basically this is a commuter vehicle. Okay, you're not going to take this on long trips. This is for commuter. But the good thing about this, the Arcimoto vehicle is that it's built for speed. Okay, it's built to get around quickly, and it's supposed to reduce congestion within the cities. So now what I want to talk about is I want to talk a little bit about basically what's been going on with the company and why I think it's overvalued. So if we take a look here, this is the recent Q1 earnings statement, okay guys? And in the presentation, they talk a lot about the company, and you guys can check it out on the website if you want to, but I want to show you guys some key specs, and then we're going to get into why I think this stock is a little bit pricey, but I think it's a long-term hold if you really think that the revenue is going to come through and they're really going to improve. So here's a look at their latest quarterly report. Okay, the company has $46 million on hand, $3 million in debt. They did $1.4 million in revenue, and they delivered 60 vehicles. Okay, so obviously growth has been pretty slow. Only 60 vehicles delivered in the latest quarter and just over $1 million in revenue. And to give you guys a further breakdown of those numbers, they manufactured 84 vehicles in Q1, delivered 60 vehicles, okay? And right now, the vehicle's only available in 4 states: Oregon, California, Washington, and Florida. So as you can see here, the CEO, he talks a lot about scaling and how they're building out slowly. They just closed the purchase of a new manufacturing plant, and they're planning to scale to around 50,000 units per year. So, from a financial standpoint, from a fundamental standpoint, just over at about 1.3 million in revenue, 4 million in losses in the most recent quarter, with 46 million in cash. So now I'm going to talk about why I think it's a bit expensive, but I think there's some long-term upside. Okay, so the current stock market cap for Arcimoto is 400 million. And right now, if we take a look at the latest revenue, extrapolate that over 4 quarters, we're looking at a price to sales ratio of about 80 to 100. So pretty pricey for this stock. But I did a quick bit of math, and if they are able to scale out to 50,000 vehicles delivered per year at around $18,000 on average, obviously some are going to be more expensive than others, that's about just under $1 billion in revenue. So we don't know how long it's going to take to scale things out. So I do think there is some upside here if they're able to scale out operations, and obviously this price to sales ratio could come down. If they can do like $1 billion in revenue and there's a price to sales ratio of, let's say, something reasonable like 20 to 30, then this could potentially be a much bigger company in the future. Okay, just in a few years this could grow into like a 15, 20, 25 billion dollar company. And assuming they don't dilute the stock, that would put Arcimoto at a pretty nice valuation of a lot larger than its current stock price. I definitely think there's some upside in Arcimoto, but if you're going, don't expect any of this upside to come anytime soon. Okay, they're really scaling things out. It hasn't been quick, so I would say be very, very patient on this stock. So I do think if you're looking to wait at least 2 to 3 years for this stock, this could be a much, much more expensive stock in the future, guys. Okay, so if they scale properly, this stock is about 50x upside. So I'm putting that like a market cap of $20 billion potentially in the future, which would make this around a $500 stock. So if you're willing to hold this for a few years or so, maybe by 2024, 2025, you could be looking at around $500 a share, assuming things plays out. So it's really interesting that this is a company, but like I said, guys, this is a long-term hold. You're going to have to be patient with this one. But as revenues increase, demand increases, and we see those price to sales ratios kind of fall down and more interest in the stock increase, I think you could really have a nice maybe 25 to 50 bagger on your hands, guys. So that wraps about things up. Hope you guys enjoyed this video. Please smash the like button if you enjoyed my content. Smash the red subscribe button as well to receive more future videos from me. So that's until next time, guys. Take care.